Silver just crashed 45% in less than 60 days, but it crashed 30% in just the last few days. Everyone is screaming that the silver bull market is over, but is it? Well, we're going to break it down in 5 minutes. First, we're going to look at how Donald Trump is controlling the global paper market. Second, we're going to look at how this mechanical shakeout perfectly mirrors the 2008 and 2020 playbooks. My name's Nick. I've been a professional investor and unprofessional trader for 24 years. Before I start, I'm not a financial advisor, and this is not an inducement to buy or sell any assets. And most importantly, do not take financial advice from some random dude on YouTube. I'm going to slow down now. Let's figure this out together. Right now, the media is saying that the silver run is completely over. They point out the crude oil is surging like to $100 a barrel, although it just crashed because of Trump. They claim that when the US dollar index surges above $100, that non-yielding assets like silver are completely worthless. They want you to believe that because silver failed to act as a safe haven so far, you need to sell immediately. Over the short term, sure, the paper price is dropping, but structurally, this is probably a massive lie because the media always forgets to mention the mechanics of a liquidity crisis. During the early phase of a massive geopolitical shock, investors sell absolutely everything to raise cash. Systematic trading algorithms do not care about the long-term supply of silver. They automatically dump tens of thousands of paper contracts to cover their margin calls. And the catalyst for this specific collapse happened on March 21st. Donald Trump issued a 48-hour ultimatum to Iran, threatening to obliterate their power plants. The exact moment that news hit, silver dropped more than 10% in one trading session. It hit its lowest levels of 2026 at around $61. But today, Trump announced a 5-day postponement to those strikes. Silver violently erased much of its losses and ripped back up to $70 in a few hours. This one man is now controlling the global paper markets with a taco and a tweet. Well, I mean, now he's been doing it for a while, right? But here's the catch, because there's always a catch. Iranian officials publicly denied that any talks actually took place. So Trump said that he spoke to Iranian officials and that the war is off. And then Iranians said, no, we didn't. So what happens when this 5-day window expires? The public message and what the smart money is actually doing are two completely different things. Let's talk about why we've seen this move before. Analysts at StoneX literally call silver the Cinderella of commodities. It can stay locked in the basement for months, years, but when it wakes up, it does so with an absolute vengeance. Look at what happened during the 2008 financial crisis. Silver suffered a massive 50% crash, plummeting from $20 down to roughly, I think it was like $9, as institutions liquidated paper assets. They flushed the market, shook out weekends, and then silver exploded like 400% to hit $50 by 2011. The underlying mechanism today is exactly the same. You could also look at the 2020 crash, by the way. Silver dumped like 40% in a matter of weeks, with COVID, falling to like $12 an ounce. The gold-silver ratio hit like 114 to 1 back then, an absolute record for the modern era. And then it snapped back, gaining 140% in just 5 months. The exact same forces crushing silver right now are the mechanical forces that create the ultimate bottom. I mean, look, that's not financial advice. That's what's happened in the past. Past performance not indicator of future results, as you know. But maybe this is just an isolated issue, right? Maybe that what's happening now is just an isolated issue. Not really, because this ties directly into the massive structural deficit that Wall Street is desperately trying to hide from you. While the paper market is experiencing a violent reset, the physical market is telling a completely different story. I mean, we all know the facts, right? The Silver Institute projects 67 million ounce deficit in 2026. The 5-year cumulative shortfall is now like 800 million ounces. We're running out of silver. We're mining less silver than we're using. And COMEX registered silver is declining by roughly 22 million ounces per month. So let me translate what this actually means for you. The actual physical metal available for delivery is vanishing, but the banks are dumping paper contracts to drive the spot price into the ground. They are perfectly happy to let retail investors panic sell their paper silver at $64, $61, like I'm sure they did today and on Friday, because it allows the banks to scoop up, and this is allegedly, by the way, it allows the banks to scoop up underlying physical assets for cheap before industrial solar demand breaks the market, allegedly. It's a wealth extraction machine. They funnel paper risk to retail while hoarding the real physical assets from themselves. That's why JP Morgan is now one of the biggest holders of physical silver. I think they have anywhere between 800 million to 1 billion ounces. So what does that mean for us? Look, my plan's exactly the same as it's always been. I don't care about these short-term paper-driven moves by algorithmic margin calls and by manipulation. I'm sitting on my hands through all this volatility. I avoid Wall Street leverage traps entirely, and I stick to physical hard assets. But this begs the ultimate question: is 2026 the exact same setup as 2008 that led to a massive 400% recovery, or is this the start of a multi-year grind lower? I personally think it recovers, but to see why, you should check out my full video on this, which I dropped on my main channel earlier today. This video right now is just a taster. In the full video, I cover my whole thesis and how you can protect yourself in these tumultuous times. So I'll see you over there on the full video. It should be on your screen now.